Harvey Jackson. Just going to go through some of the news items here today. And Martin Luther King observance during the inauguration of Donald Trump on Monday. On Sunday, the markets are going to be closed as well. So there's going to be no trade in the U.S. and we're going to have canola trading. So we'll see what kind of action that gives us on Monday. So some of the things that we're observing in the market here is palm oil is edging higher, along with some oil price rebound. Diesel, and the reason I'm starting to talk a little bit more about diesel and the whole refining, it's actually impactful for the canola for sure. So let's just keep that as a point. China's refining sector is having some issues there as well, and the election might have some plays on it. So if we look at and you can pick almost any map now. It's not trying to pick out any specific European model or whatever. They're all showing moisture in that key area where it's dry. I think that there's probably some impact on yield, but overall, the South America harvest is going to be on the soybean side is probably going to be record large, and that's putting some weight on the canola. So you can see here, this is the expected production, and you've got Argentina, and this is according to USDA. That there's going to be 100 or 52, but lots of analysts are starting to move that down to, let's call it 48, 49 or whatever on Argentina. So it's still going to be record large for sure when you put the two together. So a little bit in depth here. The last 4 days, we're seeing canola in the red. Recommending a lot of clients earlier on this week to get sales and short the market with their broker. And so far that looks like a winning play, but I would rather see this market go up than go down. That is for certain. I'm not as comfortable making money with short plays or even buying puts than I would want to be. And you can see even on some of this slow stochastics, it's actually it was a sell signal there as well. So here I'm just looking at the spreads, and we're July to new crop is actually getting down in the bottom end of this range. That spread has narrowed up, trying to indicate that the new crop is actually trying to get closer to that value of the July. Is that encouraging growers to plant? Not at these prices. So we have to keep that in mind. So what I'm talking about is just spreads between each of these months. So so you got the spread fairly narrow between July and November, and kind of showing it here is the cost of carry at 7% interest. Full carry with the interest on those days, and it's just doing the math. So March to November, the spread is 11.80, and that would be, if you're paying interest and daily storage costs, it would be $58, and it's only covering 20% of the carry. So you're not going to push grain into new crop at those kind of values and that interest cost. Rapeseed, we did get above these highs over here, and we're retracing. But when you look at this, it's actually back up to 176. Let's call it $177 more expensive than Canadian canola price in Canadian dollars. So that still leans to finding export market. If something fails in the U.S. side, the export market might be what we need for a crutch to hold us up in dollar value. And of course, that's limited time too. When Europe starts to break out of its dormancy, it's only a month and a half, 2 months away at max, right? So it's an issue there. So when you look at palm oil, it's pulled back, but it has a kind of middle of the range in this technical look on the slow stochastics here as well. Crude oil, that's if anything, that's supporting the renewable fuel space with the higher prices, but it's just it's causing other issues, of course, as well. That being diesel fuel prices going up and the cost of moving goods around and just the cost of growing a crop for us as farmers. Soybeans, the same kind of leg that we saw, it pulled back. Now it's looking at the 100-day moving average as a support. Now, if it can hold, that'd be great, but I could see there's a possibility it can go down. So we're looking at the next moving averages and just where on the Fibonacci retracement value, there's a good chance that we can get down into this kind of range. But I'm not saying that's what we're going to get there. But when you have that big crop looming over the South America crop, as that's starting to come in Brazil, it's causing some issues for sure. Just to look back farther on the daily continuous chart, it didn't break out of there, and it looks like it's basically just trading a narrow range here, and we're in the middle to the upper end of that range. So um, it's still better value than it was when it was trading closer to the bottom, and a lot of this is a result of soy meal pulling that soybean down in value as well. Here's your Canadian dollar. When you zoom in and look at it, it's getting closer to the bottom end of this range. You would say that you could potentially that there should be some support there, but it's not that long ago. That's January, let's call it January 4th, that we can get back there. And just to look over the last 6 months, and when I zoomed in, I was just looking at just a few days there. So let's have a look at wheat. Wheat basically going sideways down. If we're going to put some momentum on this chart, still above the support line at 576. And this is the area that I still would like to get to for new crop, but we're far from there, trading at the bottom end of this range. Chicago wheat grinding lower, especially when you see it in a longer view chart like the 6 month chart. What this is we had a few our broker actually talking about getting into the spread between Minneapolis and Kansas at this 30 cents, and we got in, and we're looking at exiting in this 55 to 60 cent range. So I'm just trying to capture some of the differences in protein, and because when I look at all the other charts, when we look at the wheat charts, they're not friendly to look at, and this is the only thing that we currently have on play with a lot of clients. Milling wheat just basically going sideways in this range here now, so it's not a upward looking chart like this one, and yet here we are kind of topping out right now on the corn. Corn is trading at the top end of this range. Uh, if you're in the U.S., you're hoping that it goes up, but it is said that there was a pile of selling going on in here. I didn't show volume, but farmer selling has been elevated compared to last year's pace. And some of that is just because of the size of crop and carryover from the crop year before too. So zoomed in, this is what we're seeing, and you're actually seeing that it's actually pulling back on the shorter term on the stochastics there as well. Oats, it's almost looking like it could be reaching oversold the time to maybe sell some more oats if you're trading futures. And that's all I have for you. And we'll be looking at only the canola market on Monday, and possible news over the weekend if there's any more leaks of what might be signed for executive orders and that kind of stuff. There's a lightning of probably news coming out over the weekend. We'll chat with you on Monday.